Would you like a free consultation from a company that has saved clients over $1 billion in R&D tax credits? Well, I can make that happen. I'm the author of ProfitsUSA.com, and I've referred many clients to this particular company, and I've been very pleased with the results. This video that I put together is an overview video for business owners contemplating taking a look at R&D tax credits. They're offered at both the federal level, and some states have them as well. California has amongst the best. An R&D tax credit reduces past, current, and future years' federal tax liabilities, creating an immediate source of cash. The credit is a source of permanent tax savings and can be claimed on all open tax years. If the credits cannot be used in a particular year, they are carried back 1 year, and they can also be carried forward up to 20 years. Surprisingly, the majority of companies benefiting are small businesses. Changes were made in 2007 that made the R&D tax credit much easier and more attractive for small businesses. Whoever you choose to use for your R&D tax credit should be able to prove to you that they have an audit rate of less than 5%. If you are selected for an audit, having the proper documentation and support is critical, and your provider should facilitate that for you. The company that I would recommend to you offers IRS Audit Protection and State Franchise Tax Board nationwide, all states. Throughout this video, be prepared to hit the pause button, since there is little narration in many of the slides, since they're just bulleted lists and there's no need to read them. In 2005, the large CPA firm Ernst & Young did a study on R&D tax credits, and you're looking at their findings. Almost 18,000 companies took advantage of it, and 54% of those had assets under $5 million. 71% were manufacturers, and the next target groups were services, software, and agriculture. These are the top 8 industries for using R&D tax credits. Manufacturing, biotech, and software development are the top 3. These are the 7 most popular activities that qualify for R&D tax credits. You can hit the pause here to read it if that interests you. Don't forget to click on it again to restart the video. If you have invested time, money, or resources towards any of these 5, then you should get in touch with me, and I'll show you how to do that at the end of this video. I will email you a questionnaire. You fill it out, get in touch with me after you filled it out, and then I'll put you in touch with the experts. There's a 4-part test done for eligibility for R&D tax credits. I'm going to be reading a fair amount in this slide, so you don't want to pause it. Just let me talk till the end. The permitted purpose of the activity or project must be to create new or improve existing functionality, performance, reliability, or quality of a business component. A business component is defined as any product, process, technique, invention, formula, or computer software that the taxpayer intends to hold for sale, lease, license, or actual use in the taxpayer's trade or business. This does not count third-party software that you buy internally. There is an exception that provides a more advantageous carryback for companies that meet the requirement under the Small Business Jobs Bill Act of 2010. While the computation of the credit can be complex, most companies receive a 4 to 7% of total qualifying expenditures. Most qualifying expenditures result from the wages paid to employees that participate in qualifying activities. As a result, the potential for R&D tax credits can be substantial. If your company has been engaged in qualifying activities for several years, you might be able to retroactively claim R&D tax credits. Qualified research expenditures include not only the wages paid to employees as described, but also supplies used in the act of performing research. To the extent a company employs outside contractors to perform research on its behalf, those expenses also qualify. Let's look at the 3 largest states now, California, Texas, and Pennsylvania, for an R&D tax credit. Hit pause on any of those 3 states, since all I do is mention the name of the state. If you want to read it, read it. If you don't, just let the video carry on. California is the hub of the technological world. And it should come as no surprise that they have great R&D tax credits. So if you're in California, you really need to take a look at R&D tax credits, because not only can you get the federal R&D tax credit, you can also get the state one. And that combination offers tremendous value. If you do activity in Texas that might qualify for an R&D tax credit, you should pause this slide and read it. Otherwise, we're off to Pennsylvania. If you're doing R&D work in Pennsylvania, you want to pause this slide. Otherwise, this presentation is completed. The final slide is next, and it tells you how to get in touch with me. Well, this is the last slide, and I thank you for watching. If you would like to know more about R&D tax credits, I would suggest you read the chapter in the book. I would also suggest that if you would like to talk to the R&D tax experts, do the following. Look where the green arrow is pointing. On the top of the website, to the left of where you download the book, there's a button called Contact. When you click on it, the two gray areas appear. To the left, you'll see many different options to increase your profitability using best-in-class financial solutions, all provided by best-in-class experts. To the right of that is a small area in gray where you will tell me when you want me to contact you, what time zone you're in, and how long you think that conversation is going to be. 10 minutes, half an hour, you let me know. And I'll honor that and get in touch with you. When you contact me, I'll send you out information on all the various things that you're interested in, and for those things that you qualify for, I'll put you in touch with the experts.